Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about all the cues for trade, the stocks in news, and we'll also be getting all your stock-related queries answered by our expert on the show. So keep commenting on our live feed and we will have them addressed by our expert. But before we go any further, let's take a look at what the headlines are looking like this morning. Well, US stocks recover some ground after recording their worst week for 2023. Key indices are on track to end February with losses. Investors now await major retail earnings this week, even as concerns over stubbornly high inflation keep street on the edge. Asian markets opened higher this morning. Japan reports its steepest decline in factory output in 8 months. SGX Nifty suggests a very flat start for the Indian markets. Q3 GDP data will be released today. Growth for the third quarter is seen at 4.7% versus 5.4% in the last quarter. Services sector, made up by trade, hotels and transport, is likely to drive growth. And should you be taking refuge in the pharma sector amid the sell-off in the market? Also, stocks in focus today are Zee Entertainment, Infosys and Bharti Airtel. Well, let's now get on board our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities, joining us this morning. Good morning, Sacchitanand. Good to have you on the show. Well, if you look at the markets, yesterday we breached that budget day low of 17,353. In fact, we made an intraday low of 17,299. And this morning, SGX is as flat can be, 1 point higher when I last checked. Do you expect this weakness to continue? And what are the levels to watch out for on Bank Nifty now, given the fact that we managed to once again conquer that 40,000 mark?
Good morning, Nandita, and thank you for having me on your show. Clearly, I think if you look at the last 7 to 8 trading sessions, Nifty was registering a lower top, lower bottom sequence. And primarily, if you look at the closing, it was always in the shade of red. Yesterday, the recovery was fantastic. In fact, it did manage to slip below the event low. But the kind of recovery that we saw in the second half, that was quite commendable. If you look at the chart structure itself, we have a bullish hammer formation which has been established on the daily scale. Now, if you look at the entire setup, the clear, direction could be on the higher side from here on. If you look at both the indices, if you look at Nifty Bank and Nifty itself, I think Nifty Bank is looking more confident. So I think this could be a day of recovery. The level that we are watching out for is 17,480. Once we have a closing established on this above this particular level, we may see this particular pullback getting extended. So we are not of the opinion that there could be any further weakness in today's session. Probably this is a day wherein some long positions can be built up, especially on the banking side. If you look at the Nifty Bank, the 40,000 support level was important. We saw some slippages, in the last couple of trading sessions. But if you look at the recovery, it has managed to sustain and regain above its 200-day exponential moving average, which is around 40,000 itself. So even here, the pullback looks more confident. And we may see this particular pullback getting extended towards 40,750, 41,000. This is the range that we are looking at. And on the lower side, we are expecting that the 39,880 zone could act as a very good support. So we are not expecting any major weakness, at least for this particular week. And this week could be, starting on a very positive note. This positivity may sustain throughout this particular week.
Well, the positivity may sustain throughout the week for Bank Nifty, and of course, let's hope that today is a day of recovery. Hold that thought, Sacchitanand. We'll be coming back to you, but let's also go across to Purvi, Shah of Kotak Securities to discuss the pharma basket. We haven't really discussed the third quarter earnings when it comes to the pharma pack. So, good morning, Purvi. Good to have you on the show. I want to understand from you, what were the key hits and misses in the quarter gone by for the pharma companies, and what are you making of the kind of commentary that is coming from some pharma giants like Cipla, Sun Pharma going forward?
Good morning, Nandita. Thank you for having me on the show. So the quarter 3 numbers, if you see, they have been slightly below our expectation. And as far as comments are concerned, most of the companies are looking at bigger launches in the upcoming quarters. So when these launches do happen, they'll give a traction. But at the moment for Cipla, we know that they have received a Form 483 at one of its key facility, Pithampur, and it also happens to be important because one of their blockbuster drug, Advair, has been is filed from that plant. So it's something that one needs to look forward to, although they haven't given much details on how what are the nature of the observations, but they're not even looking to de-risk from that plan. So we feel that they sound to be a little confident that it will be resolved over the next 2 to 4 months. So one must keep a watch on this development for a long-term view. We have a buy rating on the stock and our fair value is 1,265. As far as Sun Pharma is concerned, the company continues to do well, and they also have a couple of good launches that are planned. So we will be looking forward to the numbers. And one key thing that has been seen or witnessed in all the calls is that sequentially we're seeing that freight costs have started to decline. So this could be a little bit positive for the entire sector when it comes to margins.
Right. Purvi, we spoke about the regulatory issues for Cipla, but do you think going forward, the US FDA scrutiny on some of these pharma giants will only intensify given the kind of action they've been taking against all the other pharma companies?
I feel that, after 2 years of the pandemic, the FDA is now started having the physical inspection at every plant. So yes, it's going to be a little bit rigorous. But I guess if as a company, if your plants are compliant enough and you have the robust compliance policy, it's not difficult to sail through.
Right. Let's also shift focus to some recent acquisitions that these companies have made. Sun Pharma has acquired stake in 2 hardware firms, and Dr. Reddy's has also bought a stake in an Australian firm, which it announced yesterday. How do you think these buyouts fit into the overall strategy of the company, and what are the challenges or benefits that may arise out of these recent acquisitions?
Nandita, see, over a period, what we've seen that identifying or getting new drugs in the R&D is going to get difficult. So the delivery of the drug is something that is important and something that now the companies are focusing on as to how can a particular medicine be better delivered in the human body. So of course it's a little early at the moment to comment on this as to how it will pan out for each of the companies. So we'll just have to wait and watch.
Right, we'll have to wait and watch. And what are your thoughts on some of these other companies like Sanofi, Divi's Labs, Alchem Labs? How would you play these companies in the near future?
Sanofi and Sanofi we don't cover. So Divi's we do cover, but we have a reduced rating on the stock. That's basically because we expect that Divi's may the earnings or the commentary that they have given, that we see that for the next 12 to 15 months they will have to find another blockbuster drug to have a better growth compared to what they had in FY22 because of Molnupiravir presence in that year. But going forward, of course, they are also doing capex, which will start reflecting in numbers mostly from FY25. So at the moment, we feel whatever they've said, it's already priced in. And for the pharma sector in general, we feel that the next 6 to 9 months, you'll have to see if there are key launches that are happening, and you'll have to be very stock specific with the investment strategy.
So are you saying that, maybe amid the kind of sell-off that we are witnessing in the markets, do you think pharma is one pocket where investors can take refuge now for the next 1 to 2 years or a longer period of time?
Nandita, I feel for next 12 months to get some good returns from pharma sector is going to be little difficult because the base is being set now. So whatever happens happens from 25 onwards. So if your horizon is of more than 15 to 18 months or 2 to 3 years, 4 years, I guess one can start looking at the sector. But in the meantime, I feel that economic driven or consumption driven stocks is something that would do better compared to the pharma sector as well.
Right, Purvi. Well, thanks a lot for taking out time and joining us this morning and sharing your thoughts with us.
Thanks, Nandita.
Thank you. Well, with that, let's go back to Sacchitanand and talk about some specific stocks. The first on my list is Zee Entertainment. We saw the NSE, it will resume the F&O contracts in the for the company after announcing a constriction after, the news flow that came in regarding the company. But this is a second breather that's coming in for Zee, given the fact that NCLAT has stayed the insolvency proceedings against the company, and the NSE is also resuming issuing fresh F&O contracts in the company. How do you expect the stock to open today, given the fact that yesterday we saw a 6% cut on the stock, and over the last 5 days or so it has lost somewhere around 15%? What would you expect this counter to do in today's session?
I think the trend clearly remains negative, though we saw a sharp pullback towards 200-210 zone. That particular pullback was again sold in yesterday's trading session. So we expect this particular trend to continue on the lower side. We are expecting around 170-175 kind of a zone to be revisited. On the higher side, until unless we don't see Zee Entertainment closing and sustaining above the 200 mark, the scope for recovery looks very tepid. So probably, we are expecting a sideways to a negative kind of a zone for next couple of weeks from here on. The immediate base for the counter is placed somewhere close to 170. So probably we may see the follow-through movement getting continued on the negative side even in today's session.
Well, setup is negative for Zee going forward. Next talk on my list is Infosys. The company has launched 5G as a service to accelerate business value for enterprises. We also have a query coming in on this counter. Prabhu has written in and he wants to know your thoughts on this stock. Over the last, in fact, if you look at this year, IT has made a strong comeback. But once again, yesterday we saw the entire basket come under pressure. In fact, Infosys was down somewhere around 2.5% or thereabouts in yesterday's session. Would you advise investors to actually go ahead and buy into these dips now?
Well, yes, from an investor perspective, I think this is a relatively healthy space to be in. Even if you look at all the constituents, most of them have started trending higher. The higher top, higher bottom sequence is well established. If you look at Infosys, the immediate momentum could be on the negative side because it has closed below its 200-day exponential moving average. Plus, if you look at the daily scale, we have a negative crossover of its 5 and 20 exponential moving averages. So probably the momentum that we have seen in the last few trading sessions, that momentum may continue. But overall, we don't expect the stock to fall below the 1460, 1480 kind of a zone. So I think this will be a good opportunity for investors to, accumulate this particular counter on declines. And on the higher side, maybe a couple of months of consolidation going forward, but we expect eventually a breakout and a sustained move above 1700.
Right. Well, that's the view on Infosys. Next up, a query on banking stocks is coming in. Vasudevan has written in, and he wants to know your thoughts on stocks like SBI, Federal Bank, Axis Bank over the next 6 months or so. Now, SBI, we know yesterday managed to end with gains to the tune of 1% or thereabouts in a weakish markets. Nifty Bank also reclaiming that 40,000 mark. What would you advise Vasudevan to do on these three stocks?
Well, if you look at SBI, clearly, I think the selling pressure was evident in last two expiries. Even on the weekly scale, we did not see any major reversal formations. But daily scale, we are getting some signs of a cool-off. We have already seen a positive divergence when it comes to its RSI. The stock has managed to close above its 5-day exponential moving average in yesterday's trading session after a series of negative ticks. So probably we may see some recovery here from a trading perspective. We are expecting a move towards 540. This particular trade can be initiated on a short-term basis. The stop loss should be placed somewhere close to 526. But the major structure for the counter, still remains on the positive side. We have seen the stock again revisiting its 20-month exponential moving average, which is placed around 500. So we are not expecting any major, breach below this particular level. So any declines going forward, I think the zone is quite clear. 500 to 510 is an ideal zone wherein the stock can be accumulated in one's portfolio.
Right. Let's also shift focus to the telecom basket. Sunil Mittal has said that, a tariff hike could come in somewhere around mid-2023. If you look at the stock, that was under pressure. In fact, over the last 5 days, it has lost somewhere around 4.5% or so. What would you advise investors to do with a stock like Airtel now?
So right now, it is in a corrective mode. We already saw a good smart consolidation from Jan to February, mid of February itself. And post that, we have seen the stock sliding below its 200-day exponential moving average. Though yesterday's recovery was commendable, but if you look at the major structure, we have a bearish crossover on its weekly scale. The stock has clearly displayed a breakdown sign. If you look at the weekly RSI, it has slipped below the 50 mark and it is sustaining below that. So probably this particular move on the negative side could continue. 710, 720 is an ideal zone wherein the stock can be considered from a long-term perspective. But on an immediate basis, the pullback may not be sustained. And this is what we are expecting. Somewhere close to 760, 765, we may see a termination. And again, one more final leg towards 720 can unlock during this particular series itself. So if a person is looking for a long-term perspective, I think 705 should be an ideal stop loss. But the strategy should be to buy on the dips and not when the pullback is in motion.
Well, buy on dip should be the strategy on Bharti Airtel. Let's also shift focus to the cement basket. Maheshwar Bhanu has written in and he wants to know your thoughts on Ambuja and ACC at the current price for the long term. The stock, I think ACC and Ambuja, the view on cement stocks have been fairly positive given the fact that, there was increased impetus on capex in the budget. Whoever I have spoken to has given a positive view on these stocks. Which one would you prefer now, ACC, Ultratech or Ambuja?
Well, Nandita, we have already recommended Ultratech cement to our clients. Positionally, we are looking at the price pattern target somewhere close to 8,800 from a long-term perspective. Even if you look at Dalmia Bharat, I think this particular structure is also looking very bright. If you look at the overall sequence, we are expecting a move eventually towards the 2,300 mark. So I think these are the stocks that we are recommending to our clients. When it comes to ACC and Ambuja, I think the selling pressure has subsided a bit. We are not seeing any large price movements. But if you look at, the RSI, it has started moving on the higher side. So there are signs that this particular decline, which we have been observing since last few weeks, this particular decline may subside here. It has already reached, or revisited critical support level somewhere close to around 1,700. Then probably we may see a turnaround getting shape up from here on. But from a trend reversal perspective, until unless we don't see ACC, sustaining above that 2,000 mark, the confidence may not come in. So it is better to, accumulate this particular counter on a decline. 1,700 looks like an ideal support wherein the first tranche can be initiated. But I think the major chunk should only be contributed once we see the stock sustaining about the 2,000 mark.
Well, so 2,000 mark is crucial when it comes to ACC. Let's also shift focus to the realty basket. We've got a query from Harry Singh and he wants to know your thoughts on Godrej Properties. Now, the stock is trading very close to its 52-week lows. How would you play these realty stocks given the fact that, interest rates are nowhere close to going down, right? So what would you advise investors to do with some of these stocks?
I think from this particular pocket, Oberoi Realty stands out. It has been a relative performer on the positive side. When it comes to Godrej, clearly the structure has been more on the weaker side. The stock is not able to sustain, any of its pullback. So until unless we don't see it, closing above its 200 weekly exponential moving average, which is placed somewhere close to 1240, I think, until then one should avoid this particular counter. On the higher side, in case if that particular breakout is sustained, then probably we may see a fresh emergence of an impulse. But as of now, I think it is better to be with the leaders, sustaining stocks, which is, I think, Oberoi Realty. From a trading perspective, some longs can be initiated here. We are expecting a move towards 900 eventually. And the base that has been formed recently around 810, that particular base may not be violated soon.
Right, so be with the leaders when it comes to the realty basket. The next query is coming in from Jagga Jagdish, and he has a query on LIC. Now, the shares of LIC have come under a fair bit of pressure due to, its exposure to Adani. That concern is, playing out on the stock price, as we all know. But, how should one who's already invested in LIC play with these shares now? Do they hold it, or do they exit, or do they average out? What do they do?
I think averaging will only be recommended once we see some clear signs of reversal here. Until now, we have not really seen any sustenance of strength. Even if you look at its daily structure, it was trying to form a base somewhere close to 600, and that particular level is again breached. Until unless we don't see a weekly strong closing above the 600 mark, I think averaging should not be a prudent strategy. Right now, I think it's better to hold whatever you have, keep monitoring the events here, but the main tranche on the higher side should be deployed once we see a sustained closing on a weekly basis above the 600 mark.
Right. The next query is coming in from Yagnesh, and he has a query on all these food and beverages stocks like Westlife, Varun Beverages, and and the likes of Jyoti Labs as well. If you look at Varun Beverages over the last 1 month, it has given returns to the tune of 13% or so. And yesterday's session, we saw some bit of a correction coming down. It was flat, but with a negative, it closed with a negative bias. Would you advise investors to look at some of these stocks now?
From a trading perspective, yes. From an investing perspective, we are seeing some signs of distribution here. If you look at the January price action, clearly there was an engulfing bearish formation. The price action closed below its 5-month exponential moving average. So almost, since October 2020, this was the first time when closing below its monthly average was registered. So right now, I think it may not be prudent for investors to get into this particular counter, but from a trading perspective, I think the range is well defined. 1450 on the higher side looks like a good resistance, and on the lower side, the support which is established at around 1150, may not be breached immediately. So probably any declines towards this particular support can be utilized to build some long positions, but eventually we don't see it sustaining about the 1450 mark when it comes to next couple of months from here on. So probably we may see this particular stock oscillating within this particular range of 1450 to 1150 going forward.
Right. Let's also shift focus to our next query that's coming in from Rajan, and he wants to know your thoughts on DMart. Now, the stock has come off quite a bit from its 52-week high, and it's like, trading around the 3,400 zone or so. Over the last 6 months, it has shaved off around 20% or so. Would you expect the counter to make a dash at its 52-week highs anytime soon, 6 months, 7 months? What is the outlook on the stock?
Well, one thing that we have noticed is that the pace of the decline has not been really intense. It has been on a gradual declining trajectory, which is a healthy sign for a stock like DMart. The overall major structure, when we look at the monthly scale, still remains positive. The kind of base that we have seen at around 3,400, I think that particular base may not be violated. In fact, any declines towards that particular base would give another opportunity to get into this particular counter from a long-term perspective. from a 3 to 4 months perspective, we don't see the stock scaling above its 52-week high. But definitely, going forward, if you keep a horizon of 2 years forward, then we may see the stock again scaling towards the 5,600, 5,800 kind of a zone. So immediate basis, we may see that particular support getting revisited. I think that will be a good sign for investors to accumulate the counter. But from a long-term perspective of 2 years, we may see the overall journey, which has been in a strong sequence on the bullish side, getting continued. The price pattern target is exhibiting a level somewhere close to 5,600, which may be achieved in next couple of years.
Right, 5,600 levels in the next couple of years. That's the call on demand. Well, with that, we've completely run out of time. So this wraps up our query segment. But before I let you go, leave us with some stock recommendations for our viewers this morning.
Nandita, I think when we look at the banking space, as we discussed, SBI is looking much more stronger right now compared to last couple of trading sessions. It has managed to sustain above its 5-day exponential moving average in yesterday's trading session. We had a bullish Harami formation getting established a few trading sessions back, so probably that effect may continue in today's session. So price target of around 540. Trading longs are recommended in SBI. The stop loss should be placed at 526. On the sell side, the structure of Metropolis still remains weak. Yesterday, we saw a negative crossover on its 5 and 20-day exponential moving average. The RSI on the daily scale has been breached below 50. So probably we may see this particular momentum getting continued during this particular week. We are expecting an eventual target towards 1250 soon. The stop loss should be placed at around 1335 and short positions are recommended in Metropolis.
Well, a buy call on SBI and a sell call on Metropolis. With that, Sacchitanand, thanks a lot for taking out time, answering all of your queries and sharing your thoughts with us. Well, with that, it's a wrap on this edition of Morning Trade. It's a goodbye from me, but don't go anywhere because coming up next is Opening Bell.